Okay guys, first trade back after the Christmas holidays. So we're on the DAX 5 minute time frame. First trade of the week was Monday the 6th of January. I'd actually already missed kind of a couple of maybe setups, one on the FTSE and one on the DAX, because after the Christmas holidays, had 2 weeks off, you can be a little bit sluggish. So the main kind of thing coming into the market was just take your time. Don't jump into a stupid trade. Don't start off the year in the wrong way. Now, what you can see on the DAX is we had a very strong sell-off. What I was looking at initially coming into the day was if we break underneath the two grey rectangular zones, I was expecting further bearish to come in. However, we then put in a little bit of a base at very key support levels. After we put in the base, we got a strong bounce and we pushed back up above that 13,019 zone. Now, once we broke back above there, what we're looking at was the market breaking down from very key support levels, but then finding further support, and instead of using them as resistance on the way back up, breaking straight back up above and finding another kind of base. So I was looking for potential buys. The market put in a flat section of price action where you can see the market struggling to break up, struggling to break down. And then when we got the engulfing candle pressing up above all of that price action, I was then happy to get into the setup, being pretty cautious on it because of that previous swing to the left-hand side. So basically, as the market starts to break up, I'm still using that cautious approach. I'm fairly confident with the zone. I'm happy with the setup, but I'm not looking at it and thinking, this is incredibly high probability. So what do? As soon as we start to break up, I just get the stop to break even. I just protect the position. And then if DAX turns into a mover, if the trade turns into a mover, then I lock in the profits that way. Just quickly also, whilst this is running, all the markings on the zones for Zone Trader students. I did an update on the course over the Christmas holidays, kind of explaining what these are and explaining how to use them. What I'll do is I can't remember exactly where they're located, so I will post that on the screen when I'm editing this video. So the market, you can see, starts to spike up in a fairly strong way. Very often on the DAX, when you start breaking up above or below key levels, you get that kind of initial surge, but very often it falls flat. If it is going to fall flat, I've got my stop at break even. It doesn't matter. So the trade is running free. I can sort of sit back, I can relax a little bit. I'm in a good position and the trade is protected. Now, what I was looking at was in this zone that we're testing into, you can see the previous swings on the 5-minute time frame. If we started testing into those levels, I knew very likely we'd have some sort of a reaction before there was, if there was going to be further strong bullish. So it became a profit target. I get asked, all the time, why don't I look for, well, not all the time, but sometimes, why I don't look for kind of bigger profit targets? And it's because this is the way I trade. This is how my trading plan works. I take lots of trades where I'm looking for kind of 0.7 to 1 to 1 to 1 risk to reward over and over and over again. And then only a couple of times throughout the month, when I'm looking at it and thinking this is a really high probability position, am I then holding it? And those are the kind of, the ones that kind of bulk up the account when they work out. And for the rest of it, I'm just scalping. I'm scalping in and out of the market, in and out of the market, returning slightly smaller profits, but also having a lot less break-even trades and also having a lot less losses because I'm not just holding on to the trades, I'm looking for enormous moves. So as you can see with that one, around about 4-minute trade, £390. I was looking for it to close a little bit higher, but I just got nipped out of the position as it kind of spiked back down again. So really good trade, really good way to start the year. The main thing is just coming back into it, following the trading plan, understanding that I've been off for a couple of weeks and I'm most likely going to be a little bit sluggish. So avoiding any of the sort of maybe trades and only taking the trades that I think have got a really high probability of at least putting in enough of a bounce so I can get my trade protected and then I can just wait for the market to hopefully kind of reveal its hand and do its thing. So yeah, really good trade to start the year. As always, guys, I hope that was helpful. Very short and easy this week. Yeah, I hope you all have a fantastic trading year. I hope you're all having a good start to the year. I'm James Orr, and thank you.